Hello and welcome to the Caribbean Business Podcast brought to you by Assuage Business Development Limited. I'm your host, Rawle Rollocks, Director, Business Development and Sales at Assuage, where we help SMEs penetrate local and regional markets. To those of you listening in from LinkedIn, YouTube, or Facebook, we are so happy that you've joined us and we do look forward to a very lively and informative discussion. The Caribbean Business Podcast seeks to provide a regular forum for discussion of issues pertinent to regional trade, highlight the significant role of regional service providers in economic growth and development, identify specific opportunities for exporters and those persons that export services intra-regionally and beyond, and provide information on the how-tos of exporting your products and services. Proper financial reporting is known to be a critical element of business success. In the Caribbean region, however, it would appear that SMEs lag behind other regions of the world and do not appear to be taking advantage of all the benefits presented by employing the appropriate accounting practices. In our conversation today, entitled Accounting for Growth, we will delve into these issues a little bit more to uncover some of the keys that can hopefully unlock yet another door to accelerating SME growth in the region. And we are proud to say to guide our discussion today is none other than Chitrani Christin Seecharan, right? A very well accomplished and established accountant who will guide us through the discussion. Miss Seecharan, hosts her FCCA, she's a fellow of the Association of Chartered Certified Accountants. She holds an International Masters of Business Administration and is currently pursuing her Doctors of Business Administration. So you see, this is a heavy hitter here. She has over 25 years experience in finance and admin areas and over 12 years as a senior executive. She also, all right, on the other side, when she's not in the accounting practice, serves as the chairwoman of the Alcoholics Anonymous of Trinidad and Tobago, where she been giving service for many years. So, Miss Seecharan, welcome, and how are you?
Thank you, Roll. Thank you for that introduction, and I'm fine, and I hope you're fine as well.
Oh, I am excellent. Excited to begin our discussion today. And maybe we could jump in right here by getting to understand a little bit more about you so the audience can get a sense of your accounting experience and what has brought you to this time in your career.
All right, I started to work in the accounting field at 18. It was my first job. I got a job as accounts payable clerk, and I just had A levels at the time. I was encouraged to pursue ACC at the time, and I did so. I qualified at the age of 24, and then I just keep moving up the ladder. I went on to do my master's as well. After that, I moved to different jobs as well as moved to different positions. I have a lot of experience in SMEs. I also have experience in multinational companies, and I also have experience in large conglomerates. So I have a vast range of experience, and I know of the troubles that SMEs do face with the lack of accounting records and, of course, lack of expertise to do so.
Just before we jump into that, would you say that accounting was a career profession that you chose or it chose you? Is it that, some persons at a very tender age are like, listen, this is what I'd want to do. How is it for you?
Well, for me, firstly, and I went to Woodbrook Government Secondary in Port of Spain, and I remember writing my CSEC exams and walking out thinking, I want to study accounting. All right. And of course, I needed a job to do so because of funding at the time. And we didn't have GATE at the time in our country. So, of course, I would have started my career early at that age.
Excellent, excellent. We're proud to have you. And you mentioned earlier that with your experience, you are acutely aware of the challenges that SMEs face in this area. So, if you were to give your opinion and describe the state of accounting practices, would you say that you are happy with the accounting practices among SMEs? How would you describe it?
I think they have improved over the years from since my career started to now. I think they still lack expertise in that area. And of course, they lack the understanding of the importance of it to grow their business at a faster rate. Due to fear of lack of knowledge, limited resources. They may have limited resources in terms of personnel, in place of in things of money, right? Because they always think accounting and accounting softwares are expensive. And it is a lot of complexity that they don't understand, and they don't see the real benefits of it, because most SMEs are run by the entrepreneurs themselves, and their time is better spent on sales and operations rather than the accounting and getting the financials up to date. They only look at financials when it comes to taxations, or maybe if they want a loan, but they don't see the importance of how to grow that business with the information they do acquire.
So, in describing the landscape, would you say most persons are doing it themselves? They may have a bookkeeper, they may have an accountant who comes in. Some of them may use software. How would you describe what you've seen over the years?
What I've seen over the years is a vast majority of them have what is called an admin assistant or an office manager, and that is the same person that will do some leisure accounts to present some information to the entrepreneur. And from time to time, they will have an accountant coming in, usually at the end of the year, and usually is a box or pile of paper that they give you in order to finalize the accounts, in order to, do their tax return or send it to the bank or something like that. But it is not something that they pay particular attention to, right? Of course, that office manager, she is swamped with operational activities during the day as well, because she's the assistant to the entrepreneur, making all the calls, making sure everything is going right to their suppliers, to their vendors. And of course, she will jot down what she knows how to do. So lack of training is also eminent with that process as well.
Yeah, I understand, and I know as an entrepreneur myself, having walked that path, how that could be. You get so busy in working the business, you don't have time to work, on the business in that regard. You're in the business, but you're not working on the business, as you would say, and oftentimes you really don't know what's happening, with with your accounts and your accounting situation until you're told you need to access a loan or get something. Then you scramble, to get it together. So I take it this has been the experience quite often for you.
That is the experience. Another experience I've had is they say, but I'm selling a lot. Where is the money from the bank? Why isn't my bank account reflecting the activities of the business? So that's
Yes.
when they get worried, and they said, listen, we may need some extra help here.
Yes.
Even at that instance, when you do walk in the doors, you're not treated with priority. And of course, you're just given a room, given a box, and say, help me out there. And for the day, even if you have questions to put it together for them, you have lack of access to the administrative assistant or the office manager or even the entrepreneur himself, or
Wow.
herself. But that being said, entrepreneurs are a mindset of their owner. They are the driving forces of all economies. So, it's just for them to understand the importance and how to use that wonderful, bright mind of theirs to continuously grow, which will benefit the entire country that they sit in.
Yeah, so you think maybe it's a communication thing in terms of professionals like yourself, maybe not selling it well enough, selling the value or the importance of it not enough?
So if you hire an accountant just to do some taxation accounting for you, they will take that information, go to their private office of practice, and they will do it, and you would only hear from them after it is done. Then they report on what is called financial accounting, which is after the fact. So you get results like 6 months later, after you would have closed the period. And they would go through it in a high level view, because all the depends on what the entrepreneur wants. The entrepreneur wants to know if he make profit, he just looks down and see if he makes profit. He wants to know how much tax he has to pay. It's a bother for him at some times. Now, it's all about how we communicate as professionals, as you said. Um, and again, it's not what we say, it's how we say it, and how we connect with others. And you know talking to the professional and saying to the entrepreneur, listen, I can help you grow your business, and I can ensure that the money you're going to pay me is you're going to make it to pay me and a surplus on top of that. um, because you have to show them the benefits of it. When they started, they didn't start with accounting systems or anything. They started with a brilliant idea that the market took to and the consumers wanted. It was a need they saw in the market that they filled, and of course the consumers respected that and responded positively to that. That's why I said they are brilliant people in their whole mindset. And then we as professionals now need to work with our entrepreneurs to move that mindset now to grow that business exponentially. So, for example, in the business that I am working in now, which is we would have doubled our employees. So when I first started, it would have been 11 employees. Now we are 25 employees, and we are constantly growing. Because once that entrepreneur gets that information to grow that business and to make better and informed decisions, what happens is the entire society benefits. You pay increased taxes, you get increased employment, the profit levels increase to the entrepreneur, and he constantly move forward to new adventures, and of course, business ideas.
Yes, you've already hinted on some of the key things there by the very title of our discussion today we want to get to. And the whole idea is making that link between good record keeping, good accounting practices, and growth. And I think that's maybe where the link is unclear. They don't see the link. They're seeing accounting as work, as something that's mandatory, a statutory requirement, but not something that actually helps me improve my profitability. So, I'm really excited to delve into that. But before we get there, though, in terms of the mistakes then that you would see persons made when it comes to setting up an accounting practice, what are some of the mistakes that you would see from day to day and in your experience?
The first major mistake is lack of planning. So we want to go to an accounting system. It sounds nice. We convince the workers, the entrepreneurs, and they have lack of planning. So for you to have an accounting system, you must have opening balances of some sort to start with the accounting system so that we can add and update the records as we go along. The second thing we see is that they are not well informed of the best accounting software for themselves. For example, if you have a simple operation, maybe QuickBooks might work for you, or even Peachtree. And I always advise clients to do a 30-day free trial to see if you like it, because you must, and that is part of the planning phase. That is also part of the planning phase, and to see if it addresses all your needs. A lot of SMEs, their complexity comes with your large inventory base. So it depends on how large your inventory base is. For example, if you have a 20,000 line item inventory base, then of course you're going to go into more robust accounting software. Like you may want an ERP system, like what we are using, which is Priority, or you may want Peachtree, which is off the shelf, right? Software. But of course, that is not robust enough because it gives you only average cost in the inventory rather than first in, first out, or last in, first out. So we need to look at that. And of course, for example, if you have dual currency in your business, for example, and you may say,
Wow.
but I don't have dual currency in my business. But you do. If I am an importer to resell, it means I am importing in a foreign currency and then I'm selling in a local currency, right? That brings in that complexity of that foreign currency. And of course, when you look at those type of accounting softwares, that helps you because you want to look at scalability. And what is scalability? Scalability is that when I spend money on a software, that software have to grow with the business. It's not a software to look at your needs today, but look at your future needs as well. Yeah. And you may not buy all the elements of the package, but there's a possibility once needed, it is right there for you to pay an additional subscription or pay for additional module into your accounting software. So the business, it grows with the software. Yeah.
Good, good. So I'm seeing a lack of planning, uh, not accounting for growth and scaling the business,
Lack
uh,
of training as well.
lack of
Sometimes we go,
training.
of course, if we go into an accounting system and then we don't train our employees well on the software, what happens is that you have inaccurate data being entered. So when you have a chart of accounts, and that's part of planning too, you have to have that chart of accounts to have the different accounts on the income, different accounts on the expenses, on the assets and liability. And if you have lack of training with your team, you may have reclassification, or you may classify an asset as an expense rather than an asset, or you may classify
Oh,
an expense as an asset, which is easily done. Yeah. And that will give you issues when you go into filing your tax return,
yeah,
and of course all your regulatory compliances that you need to adhere to.
yeah. I want to make sure that our listeners get this. So, could you repeat a little bit what you said about the chart of accounts so they understand what that is and the importance of that? Because you're more or less outlining some key principles that should be in place.
Right. So a chart of accounts. So for example, I'm just going to use simple numbers here just for simplicity. A chart of accounts is guided by numbers. So you may say in your chart of accounts, all accounts starting with one is fixed assets or is assets, meaning fixed and current assets. All chart of accounts starting with two may be income, right? All numbers starting with three may be liabilities. And of course, all maybe starting with four, maybe assets, maybe expenses, right? So that those characterizations event automatically all our employees know if I type an account number, let's just use random 4403, we know that's an expense account because it started with the number four. If we type 1004, we know that's an asset account because we started with one. Yeah. And it's very important before we even go into an accounting software, we plan that, and we actually draw a map of our chart of accounts in order to know how we're going to, align the expenses and stuff. Yeah.
So, would you say the chart of accounts is essentially like a directory
It
outlining the
is.
categories of different types of accounts and assigning a number to it,
Yes.
to that category? Okay, great. So it's easily, when you
So what
have to.
happens is in the back end, once that user know how to data enter at their data enter point of entry, so let's say accounts receivable, she got they purchased a TV. Maybe it's $1,500, $2,000. She is at question: is this an expense or is this an asset? Well, then we look at the fundamentals. What is the useful life of the expense? Would it be, and then you decide if it's an asset or an expense. It depends. If you are in the business of selling TV, what had happened is an inventory item. Yes, that is an inventory item. However, if you're not in the business of selling televisions, however, it's part of your camera system, it has now become part of your fixed assets. Yeah.
Wow. Yeah, so I can see how we can get confused with assigning, and then of course when you're doing your final accounts, everything it's out of whack, as they would say.
Yes.
Could you apply this to, maybe I'm thinking of the types of businesses that we have quite a lot of. Let's say somebody who's in the food and beverage area. Let's say you're either a caterer or you have a small restaurant. Could you describe how the chart of accounts can be helpful in that regard?
That is useful. So what happens, for example, this is food. So you're talking food and beverages. Now, when you purchase, let's just say I purchase 100 pound of flour to go into my work in progress of making the final product of the food that you get, and you pay $30, $15, whatever you're buying. What happens is that you put that into your system, you code it accordingly. So it goes in 100 pound of flour at this value. It goes as an inventory item. Now, what happens is now when you finish the product and you put in all the expenses of the raw product, it just moves to a finished product. That finished product is then sold to you. When, of course, you purchase it, they will now record what they consider a sale of $40 for that lunch, right? That sale of $40 lunch now comes as um, maybe $30 as expense, which is goes to the cost of sales. So it moves from work in progress now into the cost of sale element. and then you have a sale of $40, so you have a gross margin or a gross profit of $10.
Wow, wow. I'm seeing it there. But as you're on that, can you then therefore describe some of the key elements of what a proper, so for anybody, no matter the size of business from the micro, the one person going all the way up, what are some of the key principles or essential elements of a good accounting system? Maybe you could just maybe give us about five key things that every accounting system should have.
Um, so a good accounting system should have a proper chart of accounts as described.
Right, yes, great.
Um, it will, of course, data entered is determining of the accuracy. As to say, must have proper training, right? Then, of course, you will enter your invoices. So I am selling a box of food. It's $40. I type it up on my point of sale system. That then goes into revenue. Okay. If you want, that is the business. When we come now and we are purchasing from our vendors the raw materials, the boxes, the styrofoam boxes or the paper boxes, and our forks and knives, that is entered now as an inventory item that will be further used to expense now in your cost of sale when you pull that entry. All you are doing is two entries for that to happen. One, you're entering a sale. That's it, $40 breakfast, $15 lunch, $40, $45, right? That's it. Now the person who is purchasing now, they go onto the inventory module now, and they will enter their inventory items under work in progress, or they may enter it under finished products. For example, in all eating places, you will have um, juices and soft drinks and water. Those are finished products, and that goes straight as inventory. It is not under work in progress. So they would enter it under the different categories. There's two different entry points. One is your inventory or your purchasing person, and one is your person selling at the counter. And then the system now tabulates all of that for you. And you will come out and you will see again, you will see your income, your cost of sale, your gross margin. And as she purchased, for example, she will be purchasing things to clean the floor. She'll be purchasing for sanitary requirements. She may be even purchasing, or the entrepreneur may be even purchasing things for their staff. So they may offer their staff coffee, or they must have water, or a free box of meal. That is called staff welfare. So what she will do is the person that's purchasing will enter that under staff welfare, and that comes under gross profit, right?
Wow.
And when you tabulate all of that expenses, cleaning expenses, rental expenses, staff welfare expenses, payroll is a big one as well. Then you come now down to net profit or net margin. And it's upon that value now that you use. And of course, you'll have fixed assets. Now, fixed assets, that's why we said, is it an asset cost or is it a regular expense cost? A regular expense hits your income statement as an expense whole. So if you buy, let's just say we buy a high, a high efficiency stove, and it may have cost us $15,000 compared to a regular stove of 5,000, 6,000 in our homes, right? That goes as a fixed asset. What happens is that it does not hit your expense in your income statement, but we would say that stove will last 5 years. And in that 5 years, every year, 20% of the cost of $15,000 goes as depreciation for that stove. And that goes on the expense as well, right? And then you get your net profit, and then you will go to your taxation.
Wow. So I could see some, persons listening and saying, wow, this sounds like a lot, you know.
Sounds
Yeah,
complicated.
it sounds complicated, we as we bring this particular segment to a close, right? What can you share to assure, listeners that as complicated as this sounds, it's very important, and there's a way to do it that makes it easy for the entrepreneur and the small business person.
Well, what I want to say is this: it is not complicated at all. All of that complication I just explained is done by your accounting software. All you have to do is your data points. So you're selling a point of sale, it's a breakfast for $15. That's it. The purchasing person, they are just recording the purchasing and they are categorizing the expenses. That's it. And everything else the software does for you, where sometimes you may have to do a month-end close or you may have to do a yearly close, and the figures tabulate for you so that work in progress goes to the cost of sale. You do nothing, the software does it themselves. And then you get information that can help you further your business.
Oh, excellent. And I want to thank you so much, Ms. Chitrani, for just part one. We want to get to the area that deals with how can we use all this information and accelerate our growth, grow our business, do more business, make more profits. So we thank you for being with us today and sharing your expertise. And for the listeners out there, we have quite a lot more to unpack, to uncover in this area of accounting for accelerated business growth, and very more important discussion coming up with Ms. Sitran in our next segment. So we want to thank you very much for listening in, for tuning in, and looking at some of the keys to help you accelerate your business growth. So remember to check us on LinkedIn, YouTube, on Facebook, like and share. And to contribute to our discussion, you can also reach out to us via email at assuage bdc, that assuage ASSUAGE BDC at gmail.com. So until next time, think regional and act global.
Thank you, Rawle.